Hello everyone, welcome to Educare 247. This is the second lecture of weekly economy and finance news series. In this series, we are covering the important business newspapers like Business Standard, Business Line, Economic Times and Live Mint. In our second lecture, we are covering news from 8th March to 14th March, and this series is very much useful for upcoming RBI Grade B and SEBI Grade A examination. You can cover all the economy and finance news with the help of this series. Humanity is going through one of the biggest crises from their existence. At this moment, knowledge and science is the only hope. You are also advised to not roam around unnecessarily, sit at your home and maintain social distancing. While sitting at your home, you can easily prepare through Educare SEBI Grade A 2020 crash course. Educare is giving 50% discount on this course and it will be called as Corona Learning. In this course, we are covering the detailed syllabus, topic-wise MCQs will be provided, complete coverage of paper 2 will be there, and GS of paper 1 will be covered, descriptive English part will be covered. Our notes are crisp and concise, and we are providing video lecture for important topics as well. Live doubt session will be there. You can get this course at the price of 1499. So after getting 50% discount, you'll get this course in 1499. You can visit educare247.com and subscribe to this course. The first news is about interest rate on provident fund deposits. EPFO, Employees Provident Fund Organization, has lowered the interest rate on provident fund deposits to 8.5% for this financial year, and earlier in previous financial year this rate was at 8.65%, so it has been lowered by 0.15%, and this decision was made after the meeting of EPFO apex decision making body, and that is Central Board of Trustee. According to Labour Ministry, there are total 6 crore active subscribers for EPFO, and this rate cut will lead to 700 crore surplus to the government, and this had been taken in a reference of economic slowdown and rising inflation. Finance Ministry was pressing the EPFO body to reduce the rate under the 8%, but they have come up with the decision for 8.5%. So this news was very much important for your upcoming examination. Let us talk about EPFO. It was established in 1952 and it works under Ministry of Labour and Employment. It assists the Central Board of Trustees for implementing 3 important schemes for the organized sector, and that is EPF scheme 1952, pension scheme 1995 and insurance scheme, and it is called EDLI. It is also the nodal agency for implementing bilateral social security agreement with the other countries on a reciprocal basis. In 2014, Union government has launched universal account number for the employees, and it covered the PF number portability, and it is recognized by EPFO. So this is very important. You must remember all these important points. The next news is about NIDHI company. Basically, government has given up to 1 year time for NIDHI companies. Basically, last year in August 15, 2019, the government has amended the Companies Act, and according to the new provision, NIDHI companies have to apply to the central government for updation of their status or declaration as NIDHI company in form NDH-IV. So this was the change in the Companies Act, and according to that change, the companies has to report to the central government, and this provision will apply after 1 year. They has been given 1 year time. NIDHI company is a kind of NBFC, and basically it promotes the habit of saving among its members. In the form of deposits, they take money from one person and give the money to the other person among the group. So this is the kind of NIDHI company. It is recognized under the section 406 of the Companies Act 2013. So this section is also very important. It can be asked in the examination. The core business is borrowing and lending money between their members. So this is also very clear. They are regulated by Ministry of Corporate Affairs, and they have to comply with two sets of norms. The first is Public Limited Company as per as Companies Act 2013, and another is NIDHI Rules 2014. So they have to comply with these two important rules, and they are regulated by Ministry of Corporate Affairs. This question can also be asked. The NIDHI company is regulated by which among the following, and answer will be Ministry of Corporate Affairs. The next news is about reconstruction scheme for Yes Bank. The Union Cabinet has approved a reconstruction scheme for Yes Bank, and it was proposed by Reserve Bank of India. Under this new scheme, State Bank of India will invest 49% equity in Yes Bank with other investors, and new investors are also being invited. This scheme will help to protect the interest of the depositors, and it will provide stability to the Yes Bank and entire financial system in India. On 5th March 2020, RBI imposed the moratorium and restrict customer not to withdraw more than 50,000 rupees till 3rd April 2020. But after passing this order, within 3 days, this ban will be lifted and normal function of Yes Bank will be resumed. So this is mentioned in this new construction scheme. There will be 3-year lock-in period for all investors, but in case of SBI, the lock-in period would be only for 26% of the shareholding. So this is also very important. And under this new construction scheme, authorized capital of the lender has been raised from 1100 crore rupees to 6200 crore rupees. So this new amount has been upgraded so that the current requirement of capital will be fulfilled, and it will help Yes Bank to grow further. The next news is about foreign direct investment. Recently, Union Commerce Minister Piyush Goyal informed the Lok Sabha about the total foreign direct investment inflow in India. During the period of 2014 to September 2019, there was total 318 billion US dollar inflow as a form of FDI, and it represents 50% of cumulative FDI since April 2000. So this was very important. In 2018-19, the FDI inflow was 62 billion US dollar, and it is the highest for any fiscal year. So this is the position of FDI in India, and this number is very important. It can be asked in the examination. The next news is about Mahatma Gandhi National Fellowship Program. This program was launched by Skill Development Ministry at IIM Bangalore. Under this pilot project, IIM Bangalore will train 75 graduates for 2 years in preparing the district skill plan considering the skill gap, market utility and government schemes. Basically, 75 graduates from Uttar Pradesh, Gujarat, Rajasthan, Uttarakhand, Karnataka and Meghalaya will be trained to prepare the district skill plan, and this fellowship was launched as a part of Sankalp program, and it is a program of Ministry of Skill Development to provide skilled manpower for district skill committee. So this is very important program to fulfill the gap of skilled professionals. The next news is about AT1 bonds, additional tier 1 bonds. The RBI reconstruction plan for Yes Bank puts to risk nearly rupees 9,000 crore worth AT1 bonds, and the bond holders have postponed their legal challenge for RBI scheme. They are not going to the court for the time being. This bond is unsecured perpetual bonds that bank issue to shore up their core capital base to meet the Basel III norms. According to the RBI rule for Basel III framework, AT1 bonds have principal loss absorption features which can cause a full write down or conversion to equity once the bank capital is falling below 6.125%. The capital ratio is going with this percent, then bank can write down these bonds. The write down means bank are not liable to pay against these bonds. There are two unusual features of this bond. The bond are perpetual and carry no maturity date. Instead, they carry call options that allow banks to redeem them after 5 or 10 years. And the second important feature is the AT1 bonds can skip interest payout for a particular year or even reduce the bond face value without getting into any trouble with the investors, and it provide capital ratio fall below certain threshold levels. So this is the features of AT1 bonds, and this is very important, and this was very much in news, so you must remember these important points. The next news is about Insolvency and Bankruptcy Code Second Amendment Bill 2020. Recently, both Lok Sabha and Rajya Sabha has passed this bill. The bill seeks to ring-fence new management from the offences committed by the old management. So new management will be not punished for the offence committed by the old management. The new bill also seeks to create a threshold of minimum 10% of allottees or 100 individual allottees to initiate insolvency proceedings for real estate projects. So this is also very important. The amendment also seeks to protect the ongoing concern status of the companies if they are going for the insolvency. If some company is going for the insolvency, their ongoing concern for any requirement will be taken care of. So this is very important for the growth of the country. The next news is about BHOOMI RASHI portal. BHOOMI RASHI portal has expedited error-free and transparent land acquisition for national highways. This portal was launched in 1st April 2018 as a measure of e-governance initiative for Ministry of Road, Transport and Highway. In 2018-19, there was total 2,920 land acquisition notification has been issued through the portal, but in previous years only 1,000 notification has been issued. So this is a successful portal. The portal has been integrated with public financial management system for depositing the compensation in an account of the affected person directly on real-time basis. So this is also very important. The BHOOMI RASHI portal is a replicable model, and state government can also use this model, and different ministries can also use those who are directly acquiring the land for their relevant projects. So this portal is very important, and it is improving the efficiency of the road building because they can easily get the land. The next news is about circuit breaker in stock market. Recently, many stock exchange, including New York Stock Exchange, has used circuit breaker to halt the trading for 15 minutes. Basically, it has been used when the market is dropped significantly. SEBI, Securities Exchange Board of India, has also introduced the index-based circuit breaker in June 2001. The circuit breaker are triggered to prevent market from the crashing, and which happens when market participants start to panic and they sell their stocks. This index based market wide circuit breaker system applies at 3 stages. First at 10% drop, then 15% drop, and then 20% drop. When triggered, the circuit breakers bring about the coordinated trading halt in all the equity and equity derivatives market nationwide. So this is very important concept to protect the investors in the stock market. The next news is about modified NPS-III. The Cabinet Committee on Economic Affairs has approved the proposal of Department of Fertilizer to remove ambiguities in modified new pricing scheme NPS-III for determination of fixed cost for the urea units. This decision will facilitate its smooth implementation, which will result in grant of additional fixed cost of rupees 350 per million ton for 30 urea manufacturing unit, and it will also provide the special compensation of rupees 150 per million ton to the urea unit which are more than 30 years old and they have converted to gas. This measure will ensure the maximum domestic production of urea and it will reduce the import dependency. So this is very important decision by the Cabinet Committee of Economic Affairs. The next news is about upgradation of national highways. The Cabinet Committee on Economic Affairs has approved rehabilitation and upgradation of stretches of various national highways covering the total length of 780 km of different states like Himachal Pradesh, Rajasthan, Uttar Pradesh and Andhra Pradesh. This project will cost approx 7,500 crore and 3,500 crore rupees will come from the loan, and this loan will be provided by World Bank under Green National Highway Corridor project. The project also includes the maintenance of these national highways for the year of 5 year or 10 year. The important components of this project is sustainable development and maintenance of national highways, institutional capacity enhancement, road safety, research and development. So this is very ambitious project to boost the infrastructure in India. The next news is about Mines and Mineral Laws Amendment Bill. The Lok Sabha has passed Mines and Mineral Laws Amendment Bill 2000. This new bill will amend Mines and Mineral Development and Regulation Act 1957 and Coal Mines Special Provision Act 2015. The bill proposes to remove end-use restriction for participating in coal mining auction. So basically, any commercial entity, either it's domestic or global, they can participate in coal auctioning and coal mining in India. Right now, it was only restricted to Coal India. This should also pave the way for auctioning of iron ore mining leases which expire this month. The MMDR Act regulates the overall mining sector in India, and the Coal Mines Special Provision Act 2015 provides for the auction and allocation of mines whose allocation was cancelled by the Supreme Court in 2014 after the coal scam. So this is very important amendment for the development. Hope you have enjoyed the video. If you have enjoyed the video, like, share and comment, and subscribe to Educare 247. Thank you and happy learning.